Good evening. Tonight we're diving into a story that began in February 2022 when Russia invaded Ukraine, setting off a chain of events that would shake the world. The world responded with unprecedented sanctions, aiming to cripple Russia's war machine and send a strong message. Among the harshest measures were freezing Russia's central bank assets held in Western banks, a move that sent shockwaves through the financial world. This move locked away hundreds of billions of dollars, euros and pounds, money Russia relied on to stabilize its economy and fund its activities. The goal was clear: make aggression costly and show solidarity with Ukraine standing firm against the invasion. For over 3 years these assets have remained frozen, a constant reminder of Russia's isolation and the global stance against its actions. Now as the war drags on, a fierce debate has erupted. What should happen to this vast sum? Should it be used for reconstruction, or remain frozen? The answer could reshape the conflict and the global financial system, influencing future international policies. Let's break down what's at stake and explore the potential outcomes of this unprecedented financial freeze. So, how much money is actually frozen, locked away from Russia's reach? The answer is staggering. Between $300 and $350 billion in Russian state assets are currently immobilized by Western sanctions. But this isn't the flashy wealth of oligarchs or private fortunes. These are Russia's official reserves, the financial backbone of the state, mostly held in government bonds and high-value securities. About 2/3 of these assets are sitting in Europe, managed by a central securities depository that acts as a giant financial safe for nations. Before the war, it was standard practice for countries like Russia to keep their reserves in stable, trusted currencies, such as the euro, to protect against economic shocks. But now, that very strategy has turned into Russia's Achilles heel, exposing a critical vulnerability in its financial armor. The money is paralyzed. Russia can't access it, move it, or use it to stabilize its economy, no matter how much it needs it. Yet, these assets aren't just sitting idle. As bonds mature, they continue to generate profits and interest, quietly accumulating value. That's led to a provocative new question. Could the interest earned on Russia's frozen money be redirected to help Ukraine rebuild and defend itself? European leaders are now seriously considering this unprecedented move, weighing the legal and political consequences. The decision could set a global precedent, reshaping how nations use financial leverage in conflicts. And as the debate intensifies, it's fueling a new and unpredictable standoff between Russia and the West, with billions hanging in the balance. Ukraine's allies need ways to fund defense and reconstruction, without overburdening their own taxpayers. The challenge is to find a sustainable and fair method of support. Seizing Russia's frozen assets outright is risky, so Europe is eyeing a middle ground. This approach aims to balance legal and ethical considerations. The latest proposal used the profits generated by these assets, not the principal, to support Ukraine. This ensures the principal remains untouched. As Russian bonds mature, the cash is frozen too, so why not redirect it? This could provide a steady stream of funds. European Commission President Ursula von der Leyen backs this idea, calling it a reparations loan. She believes it's a pragmatic solution. The plan funneled the interest from Russia's frozen money into a loan for Ukraine's recovery. This could help rebuild infrastructure and support the economy. Supporters say it's legally defensible, a way to make the aggressor pay, without outright confiscation. They argue it's a fair compromise, but it's a major escalation, moving from freezing assets to actively repurposing them. This shift could have significant geopolitical implications. European leaders are treading carefully, building a legal case. They want to ensure every step is justified and defensible. Russia, meanwhile, sees this as a direct attack on its sovereignty. The Kremlin is likely to respond strongly. The stakes are rising fast. The international community watches closely as this financial maneuver unfolds. Russia's response? Threats of severe retaliation. Kremlin officials, including Dmitry Medvedev, have vowed to pursue any country involved in seizing Russian assets by any means necessary. Legal action is just the start. Russia hints at economic and even cyber retaliation. Moscow frames the plan as theft and a violation of sovereign rights. They warn it could shatter trust in Western currencies and financial institutions. Russia argues, if the West can seize sovereign assets, no country's reserves are safe. The message is clear. This isn't just about money, but the foundations of the global financial system. The confrontation is escalating beyond the courtroom. This isn't just a Russia-Europe dispute, it's a global financial crossroads. If Europe repurposes Russian assets, it could set a precedent that shakes trust in the dollar and euro. Countries like China are watching closely, considering whether to diversify away from Western currencies. Russia threatens to seize Western company assets and escalate economic warfare. European leaders must weigh helping Ukraine against risking financial instability and retaliation. The decision could trigger a wider financial conflict or embolden Russia if Europe backs down. The outcome will shape not just Ukraine's future, but the rules of global finance for decades. The world is watching. The stakes couldn't be higher. What happens next will define the new era of international power and money.